Hi and welcome to the Market Alert for Tuesday, the 12th of April 2022. So bonds, Bitcoin and big tech battered as US misery reaches 40-year highs. This is yesterday's main headline. Stocks tank ahead of early option expiration. Market remains underhedged. This is for Thursday of this week because of Good Friday, so this will be very interesting. As it says here, Thursday is the OPEX. Expiration of options on all stocks on Friday and indices. Big news today, market braces for scorching. CPI's White House warns of extraordinary elevated inflation numbers. You've got to laugh, haven't you, at this one? You really have. I mean, everybody knows that inflation's been rising for years, but now all of a sudden, they're on the bandwagon, and yet it was going to be transitory as well. The question is whether the CPI will use the data to justify a 75 basis point or an inter-meeting rate hike. So so if it's really bad, then they're going to hike, before the next FOMC. Well, we'll wait and see, won't we? But again, it's interesting now that they're on board with all of this. And of course, they can use the Russia-Ukraine war as the excuse. Fed losing control as gloom spreads. Consumer inflation expectations soar to a mind-blowing 6.6%. Well, it's absolute BS, isn't it? We know it's a lot higher than that. In the UK, food prices rose by 12% last month alone. So, on average. And that means that by Christmas, they will have doubled. So, it's not rocket science, this stuff, is it? More respondents reporting being financially worse off than they were a year ago. Respondents were also more pessimistic about their household financial situation in the year ahead, with fewer respondents expecting their financial situation to improve a year from now. Got no chance. Absolutely no chance. I don't think people are really clued up yet to what's coming and what's happening. Parking a lot of vessels worsens as Chinese ports, as COVID shuts down, spark nightmare. This is what's triggered along with the stimmy checks, triggered the current inflation. So goodness knows what's going to happen now going forward. The Baltic dry index also dropping down. We'll bring that into the alert as we go back down to the lows, just to show you what's happening. And this is the kicker. Food shortages loom as Chinese farmers face trouble amid pandemic. Sri Lanka, they already have riots for food. Shanghai, riots for food, but that's slightly different because they're all locked up by the government and not allowed to go out and buy food. But Peru also food riots as well. So again, what's coming, I don't think people have really grasped. They really haven't grasped what's coming with the financial system. And I have to say, I was sort of optimistic about them moving the market back to the upside, but that's not going to happen. I don't believe now. And I'll tell you for why when we get to the US dollar, when we look at that. The Fed is scared. Well, you can read the last word yourself. Trouble is with swearing on YouTube. It can give you a strike. So you can see that yourself. The Fed is scared. Commentary out of the Fed over the last few weeks indicates to me that our central bankers know they are what they are doing is far too little and far too late. Well, we said that all along, haven't we? So today, this is the one. I'm not really interested in anything else. This is the one today. CPI numbers. Let's have a look. So they're going up to, wow. So they're forecasting from 8% to it's 12% actually. I don't know why they do it like this, 1.2 and 0.8. So from 8% to 12%, that's a big jump. If that happens, then the stock market tanks and the metals go up for sure. Core CPI is coming out as previous, so really interesting to see. But this is the big one. This is the big one today. Let's see if the reality meets the expectation, as they say. So let's have a quick look at gold-silver ratio as well. This moving lower. I've got some interesting stuff on this one for you as well when we look at the silver market. But at the moment, definitely the silver is trying to move to the upside. Despite the fact that it was monkey hammered yesterday afternoon, it's made an impressive recovery overnight. But first, let's get on and have a look at the Dow. And you can see yesterday it's moved lower. It's also taken out the recent low to the left as well of last week at the moment, barring the futures opening in Europe to try and bring the market back. So let's look at a bit more detail This is yesterday's low. The market's taken this out overnight. We started off well yesterday. Let me just change this colour to blue. We started off well yesterday with the Dow moving up to the DP, and it failed several times actually at this level. Then came back 89% and down we went for the rest of the session once we took out the low. But again, you can see how important the low was for the Dow there. It traded sideways and eventually the down burst and down we went. And overnight we've already gone straight through the low down to the S1. Bit of support coming in there at the moment as we're over sold, and a bit of demand as well. But at the moment the market holding at the S1. They're going to try and bring this up to the low when the German DAX futures open and the cash market this morning. They're going to do whatever it takes to get this market back, knowing full well it's likely to be hammered if the inflation comes out at 12%. So there we go. There's your downside numbers for the Dow. It's going to be an interesting week as we head into Friday, of course, shut. But so with the option expiration and the CPI, if it comes out at these high figures, then we've got a problem. So in the German DAX, let's have a look at this one. Similar picture, the market taking out the recent lows to the left through the 50% retracement as well on the overnight. Market's been sideways. It was a good day yesterday, as you'll see in a minute on the 5-minute charts and 30-minute charts. Have a look. We kicked off to the upside just as predicted, because that seems to be the pattern at the moment. The market then reversing, putting in an 89% retracement before trading back up to the 200 MA where it found a problem. Market retraces 78% to the low. Notice again yesterday the low, very important, very, very important. Brought the market back to a double top with the Dow, and then we followed the Dow down all the way through the evening, and then overnight the DAX also trading down to the S1, oversold at the moment in the 30-minute chart. This is where it's targeting. Get back above that low, do whatever it can to get this market up before the CPI numbers come out at 130 is likely to be the goal here. However, if these numbers are leaked beforehand, and that's not unusual, then we could see that the market's already priced in the downside, and then we'll just wrong foot everybody and bring the market back. So as a trader, you have to look at all of the variables of what could happen, what's likely to happen, and how they've played these things before. So I'm just giving you a few ideas here, but it's not unusual for the numbers to actually be priced into the market beforehand and then do the opposite when they're released. But I suspect if it comes out at 12% and the numbers haven't been leaked, then it's going to be quite interesting to the downside for sure. So yesterday in the 5-minute chart, as we saw, and again in the market alert, said it's likely to move back to the upside because it was sitting on the low. You can see how the low held in the pre-market session. That's exactly what happened. We then moved higher for the first 5 minutes. The market was hammered. We got through the low, but straight away we were oversold. You see the demand coming in. We got the crossover, and then the market's brought back to the low, and then we sail back to the upside. And then inside of here, we are overbought. We get our Fibonacci retracements. Everything turns red, and we come back down to, yes, you guessed it, the low. And inside of the low, we have a small increase, but we're oversold. And we then move back up to a good 62%. So it's actually 78% retracement. Overbought, divergence, crossover, red. Down she comes for another 100 points, and then as it waits for the Dow to open, you can see market trade sideways. A bit of volatility as the Dow opens. We get a double bottom here as the market tests. Green volume. We're already overbought, but the momentum's to the upside had changed from here. So the market coming in, putting another double top. We've got a double bottom followed by a double top with divergence, and then we switch back to the downside. Really good day yesterday, clear as a bell what was going on. And in the currencies, I'll start off with the yen daily, this moving sharply to the upside yesterday, trading up to the 78% retracement. At the moment, need to take this out in order to move higher. I've said it every day, we've looked at the charts, I'll say it again. The Japanese central bank wasted its money trying to slam the yen. As you can see, we're more or less back to where we started. Banks can intervene, central banks can intervene periodically, they can make an impact, but ultimately the market as the upper hand. And you can see what happened as the market continued just in the 30-minute chart to stay above the 5-bar moving average all of the way during yesterday's trading session. Meanwhile, the British pound is still sideways. Demand yesterday oversold in the daily chart and finding a bit of support here. That's going to be dependent upon the dollar. I can remove this 89 actually from this chart. So sideways for the pound, and yesterday you can see that as well. We had a bit of a move to the upside of 50 points, and then it's traded sideways. Obviously waiting for CPI numbers, because obviously an increase in rates is going to impact on the US dollar, which we'll have a look at now. So let's go back to, well, this is the one. Let's just have a look at the dollar. You can see this having moved up again yesterday afternoon. Supply coming into the market, overbought, but desperate to get the market back above this 100. Overnight, we can see that we've come back to an 89% retracement. Now, I'll just draw it in for you. And let me just spread this out so that you can see it a bit more clearly. So, yeah, you can see the high there. I don't need to delete all the fibs, but we've come back to 89, market struggling there at the moment. Now, let's have a look at the silver market. Yesterday, the market was allowed to move higher, and you can see there it moved up sharply. But what's interesting is the 30-minute chart of silver, because we had a lovely move up in the morning. Then they came in and monkey hammered it. Let me show you how much in futures contracts it cost yesterday to put this correction in here, this drop of what did we actually get a drop of there? Let me just go from there down to here. So yeah, it came down 58 cents, didn't it? So let me just show you. Let me just go to the CME's website. So yesterday, just look at the volume that was pumped into the markets yesterday. You can see there 98,831. That is just under 500 million ounces of silver, and it's one of the largest that we've had for some time. That's what 1 billion ounces of silver looks like in paper money traded on the markets to slam the price. This is what it looks like for 500 million. I think it was 494 million ounces. I calculated it out. Each contract's 5,000 ounces of silver. So you can see that was required yesterday to hammer the silver price down 58 cents. Well, good luck with that, because the market's already up in anticipation of the CPI numbers, although we can see they're trying to bring the price back again. So it's costing a lot more each time to actually manipulate these numbers and try and bring them down, as we can see here. 98,000 contracts for yesterday, big number for a silver day. Now, bearing in mind, of course, that this is 500 million ounces of silver, paper silver, not physical silver, because believe it or not, as I said before, only 1 billion ounces of silver is mined per year, and we've got 500 million of so-called silver on these days, and 1 billion on this day here, which again you can just see how the manipulation works in this market. Don't let the price go up, and already they're starting to hammer it down on the overnight there. Gold also moved up yesterday. Again, they're going to try and keep the lid on this as much as possible, but we are reaching a point where prices are struggling to hold. Arcadia Economics with Chris yesterday also talking about zinc now has gone full nickel, i.e. exploded to the upside, and I think this is going to help silver as well. I'm just hoping and praying that we get a massive short squeeze and screw Bank of America, and that would please me enormously. And here we can see that the crude oil market also moving to, well, sideways, isn't it? It's in a range there at the moment, sideways and in a range, but back above $100. It was down yesterday. What was the low yesterday? Just as out of curiosity, we came down to 97 $13 yesterday. So there we go, a lot this morning, but keep your eyes at 1:30 on those CPI numbers, because that's going to be crushing if they come out at 12%. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.